So today we will have another weekend look at the Nifty. For a change, we will go into the larger time frame to understand the perspective of what is going on. Now, on a monthly time frame, as you can see on this chart of Nifty, we are in wave 3 up. And in wave 3, we have first wave up done, second done, third done, fourth done, and fifth is ongoing. And what we think that the fifth wave is ongoing, and we have already done first of fifth and we are doing second of fifth. Now changing it to weekly, you can see this again. So this first wave is up, is finished from the March 2020 lows. Then we have had a double zigzag. And if you want the more details of this, how it formed, I suggest you go and look at our video which was posted here. Has the Nifty correction ended? This was posted on 21st of June. That is almost 12 days ago. And at that time we had postulated that the correction has ended and a new up move is starting. So students of Elliott wave will do well to study that analysis, and based on that we think that this is a good level from where markets can start to turn up. Now with this kind of perspective, let us go to the daily chart. The daily chart again shows a double zigzag, the ABC, X, ABC, and from there the Nifty has bounced up very nicely. And if you see on the intraday chart, which we'll see just now, you can see that all from the last 10 days, from the time we called the bottom in the Nifty, all the time the market fell, it used to correct and come back up. So you could never keep this market down for the last 1 week, and that is the sign of a market which is not weak, which is likely to regain strength. So let us now look at what is happening. So if my analysis is correct, we should see further rise in the Nifty again in 5 waves to kick off this wave 3 to the upside. Now wave 3 will be a very strong move. Understand that. So if wave 3 will be a stronger move than this wave 1. So you have to understand that perspective. If this count is correct, we will see soon extreme momentum in readings to the upside, and there will be again many gaps which will come. If you remember, during the last 10 days I have been again warning that you will have a gap, and all the times there were gaps to the upside except for last Friday. So what happened during that Friday? Let us look at that on the intraday chart. So now looking at this half hourly chart, we can see that Nifty probably made wave 1 up here, then traced out a flat correction, a B, and a sharp C. So once we had analyzed this, as the market was falling on Friday in this C wave, we were actually buying stocks, and we bought a lot of stuff. So we bought a lot of options, mainly some futures, but there was mostly options like Adani Ports, Asian Paints, Astral, Axis Bank, Bajaj Finserv, Bank Nifty, Bharti Airtel, and so on and so forth. A lot of options. iShare Motors, Glenmark, Godrej Properties, HDFC, M&M Finance. We bought almost 1,78,000 worth of call options on Friday as the market was falling. And because we were working with this wave count, if you can refer to my videos 2 days back, 3 days back, we had marked out this level of 15,500 as our stop loss on all our long positions, and we were ready to bail out if the Nifty closed anywhere below 15,500. Well, it did not, and intraday it turned around and most of our options started to show profits. So we are now long on the Nifty again. We have been long through all this rise, and we did not let go of the basic long positions, and we are looking for wave 3 to kick off from tomorrow to the upside. So how far can the wave 3 go on a very small time frame? So at a minimum, this wave 3 should take out 16,250, and the ideal target for this wave 3 would be 16,700. So that is just our theory, and that's just our view, and that's just our analysis. The market has to prove it, and that is what I have been saying all through last week, that this is what we are looking for, and market has to prove it by price action. But the structure has become very, very interesting, and if you can see, there are certain Fibonacci relationships which have actually worked out very well. Now here you can see that wave C actually was 1.61 times wave 1. This is the exact textbook definition of a flat correction. Now let us look at how much has wave 2 retraced wave 1. Let us see. So wave 2 has retraced between 50 and 61% of wave 1. So that is also pretty good. And all these gaps have been filled. So market is now free to rise if it chooses to. So with this backdrop in mind, we are keeping our long positions, and as the market proves itself, we will continue to hold those positions and maybe add a few more for tomorrow. Now, if you like this channel, I again ask you to subscribe and hit the like button and post a comment, and I would try to reply to all the comments. If you want me to check out any of your stocks from the Elliott wave principle, do post them in the comment below, and I will try to do my best for you guys. Thank you and bye-bye.